Hello and welcome to our event. My name is Matthew McCora. I'll be your solo host for today's event. We're going to make sure that each and every one of you, first off, understand how to communicate with me. I'll be broadcasting here out of my home office, based just about 40 minutes north of downtown Orlando, Florida. Been in this area since about 2002. So if you're familiar with the area, I'm just right past the bridge, St. Johns River, off Interstate 4. All right, so let's do this. Let's just make sure that everyone's in the right spot. We're going to talk about how to identify high probable winning trades. We're going to be talking about trading multiple markets today. So we're going to be talking about how to apply this strategy in trading currencies, the foreign exchange market, talking about how to apply it in the stock market, which is the equity world. And for those that like to trade options, I'll show you how we leverage the same information, same strategy across those three different types of investment vehicles. And the reason I like to do that is we have one methodology and we're able to apply that where we decide we want to invest. Okay, so this is a little different than what most of the presentations you probably have seen before. This is highly educational. I mean, I'm going to be giving you the keys to the truck per se. Full transparency. This is not a presentation where you log in, you sit there and you watch it, you get excited about the opportunity. The next thing you know, you're hit with a massive price tag at the end. And all the time you spent can only be applied. All that you've learned can only be applied if you make that big purchase. All right. So that's how I like to do things. So I'm all about teaching, all about providing opportunities for you to become empowered. All right. So that's going to be a little different than what most of you are accustomed to in an event such as this. Now, I'm the only one with a live microphone, and we do that intentionally just to ensure privacy and keep us from listening into your world. Okay. So you're muted in the sense of your microphone. But I want to hear from you. I want to make sure that these points are making sense, that the logic is making sense with you. So we use the question section found here on the screen in front of you. Now, this is your control panel, and this is how you can control your audio settings. This is also how you can obviously chat with me. It's like a live chat box, basically. So on my side, I see a list of all the attendees, and then any question that pops up sequentially, I'm able to answer those accordingly. Okay, so what we want to do is just make sure we do a simple sound check at this point. And it's important we do this check because I need to know everything's working. If not, I can make sure I can help. If you have any audio connection issues or video connections, I want to make sure I can get you dialed in so we can maximize our time today. So if you can hear me, if you can see a slide that says your participation right now, and if you can also see my webcam, I like to put a face to the name and voice, is just type in a hello, type in a yes. If you have a trader in your name, I can definitely give you a personal shout out. Just type in your first name, and that way I can give you that shout out. We make it easy to register, so there's no email or phone number required. You simply click, and then all we see is your email address. We don't have your name, so it definitely helps if you just type in your name as well. Tennessee Geezer's with us. Wow, okay. I love it. Vinod, appreciate it. All right, we've got Jim with us. We've got Sarah. We've got Pete, Vic. Thanks, Johnny. Johnny's with us as well. Jessica's with us. We got Alan. We have Al P. Good to see you, buddy. We have Festo. Yeah, so it looks like we've got a big old group. And I apologize if I didn't get a chance to read everybody's name. You know, I want to make sure we hit the ground running. But based on this, I'm just reading the question section. Yeah, I don't have anything that's jumping out as any potential roadblocks to audio and video connections. All right, Don. All right, fantastic. So rule number one is do not leave with a question unasked. Okay, so I'm here with you live. I like to be done in an hour, but I have yet to be done right on an hour. Hopefully today, you know, we can get done with that hour and 20-minute mark or less. If I get done sooner, obviously I'm on my game and make sure that I'm explaining these concepts to you quickly, but, you know, I'll be as engaged as you all are. All right. So it looks like we've got everything ready to go. I don't see any issues. All right, perfect. All right, so if you haven't seen me before or heard me speak, I've been in the industry for over 13 years. Maybe you've seen me at investor expos, Money Show, a group over at Trade Thirsty, or if you're familiar with Traders Agency. I speak across the board with many different groups out there. Many of you know me already, so I don't spend a lot of time on myself. That's not the point of this. But just know I spent my time behind the scenes for over 13 years as a chief revenue officer for one of the largest financial education trading technology companies. Part of my responsibility was not only revenue creation, but more importantly, to get the revenue in, we had to provide solid programs, solid service, solid trading services to assist our traders to accomplish their financial goals. So for me to oversee all those business groups, from customer support to sales to all of our traders, I had to understand what trading was about. So in 2007 is when I began my journey to become a chartist. Okay, so I spent my time early on learning how to trade, in my opinion, one of the most difficult markets to trade, which is the foreign exchange market, trading currencies. Reason why? Because it's so technical. It is a highly technically reliant market. You've got to be able to read charts to do it effectively. So then I took that knowledge and applied that across all the financial markets and found a little bit of a success throughout my career. And what I've found is that the more you give, the more you get. Okay, so the theme of this presentation, I'm going to give you all the different tips and techniques, active strategies that you can deploy on your own. With that said, you may be thinking or wondering, well, what's in it for you? Well, number one, the more I speak, the more I teach, the more I learn individually. So if you've seen me before, you know I like to teach as long as my voice holds up. I'll sit here and teach these concepts until they start to make sense with you. But number two is we do offer a VIP service called our Trading Signal Program, where we deliver to you signals, okay, based on our analysis. So if you do like this level of trading today that you're going to see, you not only can receive signals from our group across stocks, option trading, as well as Forex trading, but we also provide daily trading sessions, right? So actually twice a week, every week, we're with you live, and I continually teach these concepts to you. So it becomes an earn while you learn type of environment, all right? But that's down the road. Let's first talk about what we're going to be discussing. So the essence of the focus today is, how do we find breakout trades? What's going to be interesting for many of you to find out is that a chart is a chart. And if we can understand the basic concepts of how prices move, why prices go up, why prices go down, I think you can apply the strategy today across almost any major market. Now, I use this trading stocks, options, ETFs, like the Qs, the SPY, other broad-based exchange-traded funds. I use this when I trade the Forex market, trading currencies. And I also use this also trading cryptocurrencies. So I overlay the same concept. So I don't have to learn 10, 15, 20 different strategies to trade. I can learn one. And when I understand the concept, the chart is replaceable. I can roll in any chart, any time frame, and understand what's happening. Okay, and that's what I'm going to do today, is try to provide all of that to you in about an hour, hour and 10 minutes. All right. So what we're going to do is we're going to talk about simple and repeatable steps. Okay, this should be a methodical approach, an objective approach, because if I can give you the roadmap, you become empowered. Right, and that's what the end goal is. At the end of this, you're going to see exactly how to provide income for yourself. That's the goal of this. So this is not an investor type of event where we're buying and holding for months and months and months at a time. This is really designed for that trader, those short bursts of movement. I'm not talking about short bursts like minutes or even hours, okay? We're talking about days. Average trade length is going to be around, for stocks and options, 3 weeks or less in a position. Forex market's a little different. Those are going to be in a few days in a position, okay? So I want to set that precedence. We're not talking about buy and hold for an eternity. We're not doing that here today, okay? So that's not the end objective. So the way that we break this down, using this simple form here, we're going to identify volume surge. Okay, this is where you see a larger than normal spike in trading activity. We're going to take it all the way down to an individual symbol. We're going to make sure we have the right direction, meaning if we want to find buying opportunities, we want to make sure that we have a clear and decisive uptrend. If we're looking for shorts, then we're going to be the opposite side. We're going to be looking for a clear and decisive move down, right, on the short side. And then we're going to time those entries. Okay, so then we're going to talk about how do we know when is the time to get into the position. And then with that, we're going to make sure that we have a clear roadmap to get out at profit Or if we're wrong, which everybody's ultimately wrong at some point in trading, how do we mitigate that risk? Okay, so these 4 overall processes is what we're going to talk about today in this event. All right, so without further ado, let's jump over into the charting platform that we're going to use today. Now, this is a free account. This is TradingView. So I'm going to pull that up, move that over to the main screen here for us. And much of what you're going to see, another major focus of mine, is to take all of my years of experience and sum them up so you can get information without excess investment of capital to use it, right? So when you think of trading technology, you know, you should think about, well, how much is it, right? You think about all the different types of education that you've invested in to learn how to trade the markets, right? That's an investment. Now, if you could take that investment and make money with it, then that's a worthwhile investment. But to me, there's so many resources out there that are available to you. You just may not know how to use them or how to put them together in a systematic process. All right, so this is TradingView. If you're not familiar with it, this is a charting platform. And it is one of those platforms that you can have a free account, which this is. This is not a paid version. I'm not an affiliate of TradingView. I should be how much I use it, but I'm not. So I have no monetary motivation here to promote them. I just use them for a very long time. They have all the major markets. They have anything you can think of, any symbol of your choice, they'll have it. All right, so that's what I commonly use. If you don't want to use TradingView, you can use your broker's charts. You can use any platform of your choice. Okay, I use Thinkorswim on the equity side to trade. That's how I place my trade in the equity world. They also have charts. Okay, nothing what you're going to see today is proprietary when it comes to the charts. All right, so this is all free content available for the world. All right, and you can see here, I'll show you that it's free because you can see it's going to ask me to upgrade sporadically throughout the event today. All right, so you don't need a paid account for any of this fun stuff. So I'm going to go over and we're going to start with some commonly known symbols. All right, so we're going to pull up the SPY. Okay, now I'm going to clear up some of this stuff for us in a moment. I'm just going to hide some of these indicators, and we're going to talk about those in a moment. But this is the S&P 500, also known as the SPY. This is a collection of what some would describe as the top 500 companies in the U.S. market, and they've created an index, or in this instance, it's an exchange-traded fund, which is also known as an index. All right. This symbol is one of the most traded, most liquid symbols out there in the market. A lot of people trade options here. Some people will trade the ETF outright, right? But there is a lot of activity around this symbol, right? This is one of the top most liquid traded symbols out there. But what we're going to talk about today is how do we take this information that we see on the charts and how do we make decisive decisions, right? How do we be decisive about how to take advantage of it? Now, I'm going to start with the SPY just to teach the concept. But here you'll see by having a template, we're able to fly through lots of charts. And it's not going to matter if we're talking about cryptos, Forex, stocks, ETFs like this. You're going to start to see the market in what I like to describe as 3D, okay? 3 dimensions. In fact, I like to take it a step further and talk about a 4th dimension, which makes this unique. So when we see price like this, when we see a chart, depending upon your experience level, you're going to see several different things, right? So if you're new to trading, you may go, well, the price is higher than it used to be. Well, that's true. It's all relative, I guess. Is it higher than what point, right? If you're experienced traders, you can start to visually see that we're bouncing off an upward trend line, right? So if you are in the financial markets, you've learned how to trade charts, maybe you invested in education in the past, you should visually see here that the price is making higher highs and higher lows than the previous levels, right? That is what defines an uptrend. One of the issues with drawing trend lines, okay, so let's break down our process. There's really 3 steps to trading. 3 magic questions. What to trade, when to trade it, and how to manage that trade. Those are the 3 important questions that must be answered consistently and successfully to make the profits that you're after. Now, everyone's got different profit levels, so I'm not going to lump you into a certain bucket or basket of opportunity, right? Everyone's different in regards to your personality type, your risk aversion, right? Some of you don't mind taking more risk. Some of you don't want to take risk at all. You know, everyone's going to be in a wide spectrum. So my objective here is to answer those three questions: what to trade, when to trade it, and how to manage that trade. Okay, so we can do those three things. I'm also here to say that not every trade is for everyone. Okay, there's a whole range of different ways to trade the market. Okay, so we're going to try to really simplify this approach. So I'm going to show you the concept of identifying and using volume as an indicator, and then how to deploy a 3 moving average strategy. Now, if you Google 3 moving average trading strategies, you're going to see hundreds and hundreds of results of your search, which are fine. And they're all valid, and I use a lot of their settings. But what we do is we add another layer, another dimension to that trading called volume. So we're going to tie in not only 3 moving averages, but we're going to also deploy volume. All 4 of those combined together help to build the overall strategy. Okay, so let's talk about volume first. Now, the market just closed, which is fine. We don't need the market open for this. In fact, I prefer the market not to be open when I take my trades, because I'm not looking to scout the market. I'm not looking to get out in a few minutes or even a few hours. I'm a swing trader, so most of my positions are, as I said it earlier, you know, a few days to 3 weeks, right? So we're talking 3, 4, 5 days, upward to that 3-week mark is typically my average hold time with a strategy like this. So we're going to now roll into, and I'm going to give you a simple explanation of the power of trading volume. If you understand volume and how to leverage it as a leading indicator, it really changes your dimensions of trading and mindset. So what we're going to do is we're going to go over and use another free resource. And we're just going to jump over to Yahoo Finance for a moment. And this is the fastest explanation that I found to understand how to leverage volume. So what we're going to do is we're going to pull up a list, a screener, and it's going to basically be a list of stocks that went up the most today. Okay, it's called the top gainers. So we're going to go to the daily gainers list. This is not our method of finding what to trade. Okay, so we're not just going to find the top gainers today, buy them, and hope they go up tomorrow. Okay, that's not the intent of this. I'm going to teach you how. So when you ever pull up this list, and this could be anywhere, you could find this on TradingView has this, you can go to Thinkorswim have this, any broker is going to have the top gainers. Every financial site, Bloomberg, Fox Business, Yahoo is all going to have a list of stocks that went up the most in that day. I mean, this is not a secret. This is found everywhere. But I want to highlight this to show you the power of when a individual symbol, now we're talking about stocks here, but it applies to any symbol, any market. When you see a surge of trading activity above the norm, you will see a higher average trading range. You'll see a higher move of that price. That's how trading works. When there's more buyers than sellers, price goes up. More sellers than buyers, price goes down. But what I'm here to say is when there's more activity than normal, you will get a faster move. You will get not a 1%, 2% move, you'll get a double-digit move. And we're going to talk about that here. So this list is the way Yahoo Finance has it. You have the symbol of the stock here. You've got the stock name. You've got the last price traded since the market's closed. It's now at 420. You'll have the last price traded, which in this example is AMC, closed today at $43. It went up $8.47, so that's the dollars and cents of the movement. But this list is based upon the percentage change. So AMC went up 24% today. Now, this one hit the average day. So today, the volume was 165 million shares. So this is not dollars. This is the individual number of shares traded. Now, you may look at 165 million and say that's a lot. You may go down to HCA, the second symbol, and go, wow, 4.8 million, that sounds like a lot. I'm not interested if it's high or lower, if it's high or low volume. I need to have a basis to measure that against. It's got to be relative to something. So this next column here is average volume. So this gives you a sense of what the average day looks like for that particular symbol. So AMC's typical day is 167 million. So it's about right at the average day. Now, the only exception with AMC, if you didn't know, AMC is a meme stock. That's a Wall Street bet stock. That's a lot of artificial movement of that price. So it's not really the example that we want to see. I don't really trade it. It's fun, I guess, if you're into that level of meme stock trading. You know, AMC, GameStop, Nokia. There's several others more like it. But it still holds truth. When you see a surge of activity, you see a big move. That's a 24% stock price move. That's a big move, right? HCA, 14% stock price move. The average day is 1.3 million. That's the average day. Today, 4.8 million shares. That's over 2.5, 3 times the normal activity. Stock price jumps 14%. SolarWinds, average day 745,000. Today, 4.5 million shares traded. Okay, so do the math. That is defined as a lot more activity today than historically for that symbol. Stock price up 14%. Silvergate Capital also beat the average. So I want you to start thinking about what happened today versus the typical day. If you see greater activity today than normal, think big move. And if you go up and down this list, you're going to see 9 out of 10 of the big moves today came with a surge. I wish. Some of you may be thinking, well, it doesn't happen all the time. Well, that's the case with everything in trading. I would say that's the case in everything in life. Okay. There's no 100% certainties in life and our personal lives. There's no 100% certainty in trading. There's also no 0%. Okay. So when you look at spectrums, there's no 100%, there's no 0%. So most of us live in between 0% and 100%. Probability. Okay, so I like to build a relationship between trading as a game. Now I'm going to remove my webcam. I'll pick it up in a second, but I just want to make sure I get enough real estate here. So you should now get a bigger window because we're going to really jump into charts and it makes it easier to see the price. So the key I want you to walk away with here is that if we can understand and identify when an individual symbol sees a surge, that we anticipate a big move. Okay, so big trading activity needs to equal big move. Okay, big percentage movement. If there's a surge up, bullish, I want to see that price go up. If it's a big surge on the activity and the price goes down, then I know the bears have control. Okay, that's the premise. So you go up and down the line and you'll see there's one of the exceptions. DVGO went up 12%. It's a low dollar stock anyways, but it was undervalue, under activity. Stock price still jumped, but keep going down the list. Newegg, 5 million shares versus 3.3. Napa, 1 million versus 418,000, right? Zehu, almost at the average, okay? So if you could just see, just look up down the list. Alcoa, 10% stock price move today. Alcoa is a big, big company. 15.3 million shares today. Okay, so now how do I apply this to a chart? Okay, so if we can now take this type of information I just shared with you and now apply that to a chart, watch what happens as you start to see big candles also are going to correlate to big volume. All right, so let's go to the charts. So we got the SPY, and what I'm going to do is I'm going to turn on the volume indicator. Now you're going to see 4 indicators, 1, 2, 3, 4. The top 3 are moving averages. The bottom one is a volume indicator. So volume is exactly what I described to you. So each one of these columns down below here on the bottom half, that histogram, or it's a column bar, is giving us the visual representation of how much volume was traded by day. Now I say day because I've got a daily chart. we're on a daily chart. I trade all equities on daily charts. Some programs we have are weekly charts, okay? But the majority of my stuff is not intraday on the equity side. The only time I go intraday is Forex, trading currencies. So because I'm on a daily chart, that means every one of these bars on top is giving me that day's information. Now the market's closed, so there's no live ticker, which I enjoy. This is today's bar for the S&P. Now, if you're not familiar with candlesticks or wicks or how to read candles, very simple. Think of a candle, you got a wick. Wick high is the high price. The lowest price on that low wick is the low price of the day, and then you've got the open and close. So green bars are bullish. That means the market closed higher than it opened for that day or that time frame. Green is represented across almost every charting platform you'll see, unless you change it. Green is bullish. I love it. What about ES on 5 minutes? Yeah. If you're going to trade that low, then you're more than likely trading weekly options or you're in scalp the market. This is applicable, what you're going to see on any time frame. I personally just trade daily so I can catch more of the swing, right? That's just my preference. But this is applicable, what you'll see on any time frame, any chart. Great question, though, Pac-Man. So like the day before, which was yesterday, right, Monday, it's red. Okay, that means the market closed below the open of the day, right? That makes it red. That's just your short and sweet reading candlesticks. Now, below here, I've added a moving average to the volume indicator. So this volume indicator, if you want to follow along, is simple. I turn on volume and I turn on this volume moving average here. Okay, so I got it. This box is not defaulted out of the gate. You've got to turn this on if you're following along with me. You're going to click this box. This is how it comes. You want to have a basis, right? Because all this is without the average, right? Remember I talked about the average on Yahoo Finance. Without the average, we have nothing to measure the activity against. Okay, so this is just data. Just like the charts and the bars here, that's just data. It's just what happened. We need to be able to evaluate what's happened here. So I come back to the volume. I'm going to turn on the moving average, and I'm going to give you the input I use. Because I'm on a swing, I'm looking for swing trades, right? So like I said, a few days to a few weeks in a position. That's my hold time. I'm using 20 as a length. What that means is I'm calculating this line here, this blue line that turned on, is the rolling 20-day, because I'm on a daily chart, 20-day average volume for the SPY. If I go to the Qs, QQQ symbol, which is the NASDAQ 100, it's going to give me that data, right? So it's all relative to what symbol I've typed in. But now I've got a basis to measure. And then as I move the cursor day over day here, you see the price move, these figures move here, right where my cursor is to the left. It's always giving me a rolling average, which is in blue. Okay, so if we go to today, today's average over the last 20 days for the SPY is 66 million shares. In green, that is today. Okay, so the 98.876 million shares is today. The dark blue is the average, right? The other way to visually do this, which is easier, is I'm looking at how the columns are compared to that blue line. So today, over average, okay? Monday, over average. See how high this column is compared to the blue line? Friday, above average. Thursday, below average, okay? And then I can go historically back in time and see what the activity was on that day compared to the rolling average, right? So every day goes by, the calculation adjusts. So if I go over to like the Corona sell-off, which was in February 2020 back here, you're going to see all of this massive trading volume. So this line really took some time to come back to earth after this massive sell-off activity that we saw during the Corona sell-off period, right? But because it's an average, it allows us to compare the recency versus the average. And that's what allows us to get that quick comparison. Now, when you see these big bars. Okay, so yesterday we talked about this in class. We have a class every Monday at 7 o'clock at night Eastern, and then we have a class every Thursday at 10 a.m. Eastern. So remember I said, I'm going to teach you this. Then we also have a service where we actually give you signals, right, that you can subscribe to. It's only $499 for the year. We cover stocks, options, Forex, all three markets for just one price. We talked about this last night in class, and we put on the chart this bounce today. We talked about it in class. You can, if you sign up, you can go watch the class last night, archive class, and see us specifically talk about the bounce today. And it did what we thought it would, because that's how the markets react. But what I want to highlight is these moves. Okay, so I'm going to zoom in here for a second. What you're going to find to go along with my Yahoo Finance walkthrough is that when you see a spike, when these columns are greatly above this blue line, you're going to see bigger swings between the high and the low. So when you see yesterday's move from the high to the low, I'm going to take this little magic ruler. That's a 2.2% move in one day from the high to the low. Look how big that bar is. Go to the only day in the last few weeks, which was the 15th of July, and you're going to see a smaller high-low swing. 0.81% was a high-low move. So I showed you 2.3% on a massive volume day on Monday versus a low volume day at only 0.81. Okay, so you can now mathematically see a difference. And if you just go back historically, you'll see look how small these bars are. Look at this period here starting on the 24th of May all the way until the 15th of June. Look how tight this range is. See how small these bars are, those highs and lows? See how tight they are? That's what low volume conditions look like. Now, if you're fine with low volume turtle trades, and stick with your turtle trades. But if you can identify the next breakout, it's going to come with volume. So go to the Qs. All right, we'll roll to another one. Look at these bars. So we've had lots of activity around. Oh my gosh. How many of you were in class with me last night? I see clients here. I'm sorry. This is, I guess, an inside laugh because I called it right down to the price. Holy cow. So last night, I was teaching the concept of the middle. I'm going to turn on my camera for this. And I always carry this rubber band on my wrist. And I do that not for like that movie with who was it? Matt Damon, where he keeps that, or not Matt Damon, Mark Wahlberg, where he has to keep snapping so he doesn't get angry. I don't know if you've seen that movie. I can't remember the name of it, but it's a movie. I do it to remind myself of the middle. Okay. So what happens is an expansion and retraction in the market. So markets expand and they retract. They expand and they retract. So talking about this last night in class. So all we had was this bar. We didn't have today because this was last night at 7 o'clock. And I said, the market likes to get to the comfort zone. Okay. The comfort zone is the middle. And I'm going to layer on some other indicators here to really help elicit this educational concept here. So before yesterday, and I'll even take us back to last night, this is all we had last night. Okay, so we had, this was the close yesterday. You can go, if you want to fact check me, go pull up your charts. This is just TradingView. And we said, after a big move like this, the market wants to get comfortable. All right, just like you and I want to get comfortable. Think about losing weight. I was a personal trainer in my younger days. Today's my birthday. So I'm talking half my life ago, I was a personal trainer. So early on, I learned how to communicate effectively, how to motivate others. And what's interesting is what I found in my career is that learning how to lose weight is difficult. Learning how to trade the financial markets is difficult. Maybe it's not losing weight. Maybe it's putting on weight. Maybe it's just getting back to a healthy body position, okay? You just want to be healthy. The reason it's difficult, and it becomes even more difficult if you've been carrying that excess weight for a long time. If we all remember our college days, we probably looked a little different than we do today. most people look different today than you did in your college days, right? I mean, that's just natural, right? I have a lot more gray hair than I had in college, right? Also, my body profile looks a little bit different. But with that, the comfort zone is what our body comes familiar with. So we may have been comfortable 20 pounds lighter in college. Our body was used to it. It was accustomed to being that weight. Add on 20 pounds, 20 years later, 10 years later, 5 years later, everyone's still different, right? Your body has become accustomed. Your mean weight, mean, not angry, but your mean, deviation to the mean, right? Your mean in the form of math, your mean weight is what your body's used to. So trying to change your body dynamic to get used to being 20 pounds lighter is where that difficulty comes in. That's why fad diets don't work typically, because it's not enough time to get your body used to the weight. You drop quick, your body's not used to it. So your body goes, oh no, we better put weight on, because it's used to being 10 pounds heavier, right? If you didn't know that, that's what happens. In the financial markets, it happens the same way. Price action is an effect of trading action. Who creates trading action? You and I. Now, it's not just a retail trader. I'm talking about traders, people that get into the market, they buy, they sell, they sell, they buy. Okay, that's institutional traders, hedge funds. You may think, oh, what about robots, Matt? Who created the algorithm? Humans did, okay? So with the human element, everything's used to getting back to the middle. Set point is what Pac-Man says. I'll show you those retracement lines. Yep, I'll show you that. Thank you for the happy birthday. Appreciate it. Yeah, I'm getting excited to grill out. I got a big old cowboy steak. Getting ready. I'm getting hungry thinking about it, so I'm not going to think about it. All right, so the middle. Okay, let's get back to that. So if I take this rubber band here, this is the middle. Okay, my index, my thumb, right in the middle. As I stretch this, what's happening? I'm building up tension, right? There's tension. Now, I was practicing this earlier today because I was messing around, piddling, as I call it. And if I let go at the same time, if I let go of my top fingers and my bottom finger and thumb here, this rubber band snaps back to the middle. It almost hovers, right? It's like a magic trick. Like, how do you get a rubber band to hover? You let it go, and it's going to sit here until the sides meet, and then it drops, okay? The markets react the same way. So when you ever see the markets ebb and flow, and I broke it, right? That's what happens. Then you break, okay? That's when you get into trouble, right? I have a whole drawer full, so I just have to replace that. But that is that expansion retraction. Where it retracts to is AKA the retracement. I spent 10 years trading Fibonacci's. So I know all the Fibonacci numbers. I don't quite use the same Fibonacci numbers. I use a different set, but the same concept applies. The most hit retracement level is the middle, 50%. That is the most hit retracement level. And the reason why is simple. It's the comfort zone. It's the middle. So here is a simple explanation of what we went over last night. Okay, I'm going to turn off my cam just so we can get back to a full screen. I just wanted to show you my rubber band. But here is how it works. Okay, this is the top. This is the most recent high we had. This is the most recent low, which was yesterday. Because mind you, this was last night. And the topic was, watch how this market tests. So the market expands and it retracts. It wants to test. It wants to confirm, are we in fact going to change direction? Because even though this was a big down move yesterday, all in all, this is still in an uptrend. Is it not? Is this price, even though it closed down here, above these prices? Oh, yeah, it's well above these prices, right? That's an uptrend. Okay, that's the simplest explanation of an uptrend you'll get. Most traders, I say most because it's a difficult thing to get trend right. Believe it or not, trend identification is one of the most difficult aspects to trade. You think it's going up, it goes down. Okay, that means you're getting it wrong. A lot of it can be simplified for you. But this stretch, what happens is the market wants to test. So the topic last night was the test line is going to be this middle line. So all I did, and this is what the say, all it is 0 So you go to fib retracement, which is found over here. Here's my fib retracement option. And then all I have is set is on 0, 0.5, and 1. So here's the top, there's the bottom, and then I have the middle. So no matter where I draw this, I get a middle move. So I could be back here, I can be here, I can go bar over bar. It's just going to give me a 50% move to wherever I have my cursor. So what we said was that last night, look, any big move like this that you find, you will see a test, okay? The test is the retracement. It's the traders in the world thinking, is it really going to go down? Is it really going to just keep going down and down and down? Nothing goes in a straight line. So the lesson last night was simple. When we get into these positions, we need to understand what is going to happen tomorrow. What's the highest probability of what to expect tomorrow? So whenever there's a move like this, especially a gap, right? You can see the gap here. That's a big substantial gap. We have expanded that rubber band. It can only hold so long. Like I showed you, mine broke, right? Mine broke literally on air. When it snaps back, it's got to go somewhere. How high that goes up inside of that previous move is going to give us a sign for, is this a typical move? Is it a typical retracement? And then it's going to extend again. So the simplest way to do that, to keep it simple, is to have this 50% line. If we close and react below this line, right, bounce is a test. Then we're going to think bearish still. If it closes, it gets above this 0.5 level, then think triangle. That's sideways. That's a little complex, but I'll get into that in classes with you. I'm going to keep this as simple today, right? So we think typical retracement, then extension. So we're just thinking of a nice little hook and move down. Or if it gets above here, we're thinking it's going to start to go sideways to the right, okay? I'm not going to talk about that today. It's going to be too long. That'll be another hour on top, but we're not going to do that. So I called out this line. I said, watch the pullback to 358.77. I said, watch this tomorrow, which was last night, so that means today. So this is what happened today. Is this getting to the middle? You may think this is one example. You do this, you're going to see example after example after example after example of when this happens, what to expect. So let's see how close was I. We closed at $358.79. What's the 50 line? $358.79. It's pretty close. 2 ticks away. I mean, that's a fraction of a percentage off of hitting it right on the head. That's math. It's the math of trading for you, okay? So how do we then leverage this? I just thought that was awesome. And it happens over and over again. No matter how many times I see it, it just gives me a level of excitement because understanding the next move is where confidence comes in. More so than confidence, what I find more useful is it lowers your anxiety levels. So imagine being wrong. Imagine being down in a trade and pulling up the chart and looking and going, oh, it's just a retracement. I'm fine. That is a different feeling than being down in a trade and not knowing what is going on. How many of you agree to that? Type in a yes if that makes sense, right? Would you rather be down in a trade and have confidence that it's going to go your way, it's just a typical retracement, or would you rather be in a position where you're wrong and you have no idea why, right? That is a very difficult proposition, and even the best of us get there at some point. I'm not immune to that. We're emotional human beings. That's what we are. But the more we can be objective, the more our lives are stress-free. Okay, I don't want to remove all stress because it makes it exciting, right? All right, so let's talk about the additional layers. Okay, so I'm going to roll this all together now. So when we have volume and we can understand, wow, something just happened, breakout. We've got to know when and how to trade it. Okay, so I'm going to scroll out again. If you like that retracement conversation, we talk a lot about those in classes. I just don't want to get too complex in a session like this. Okay, so if you like it, you'll learn so much to your heart's content. You'll look at the market in a different lens. All right. But now let's start layering in some analysis. Okay, so where most people begin is you learn how to start drawing trend lines. Okay, drawing trend lines is where I believe most retail traders get into trouble. In fact, most institutional traders, by my research, don't manually draw charts. What they do is they use indicators. Now, the reason they use indicators to me is actually simple. Depending upon who taught you, there's lots of companies, I used to work at one of them, where they promise to teach you how to be a technical trader. And it's a huge, I mean, it's a fantastic education, but it's massive. I mean, it's $5,000 to $10,000 worth of education. I mean, it'll take you 6 months to go through it all sometimes. And if you don't get it, it's hard to get that one-on-one attention because, you know, it's just the way the world works. That's a lot of time to invest how to learn how to be a chartist. I got paid to learn how to trade. It was part of my job function. Okay, so I was in a different scenario. I didn't have to pay for it. I got a paycheck every week, and I learned how to trade. So the reason with drawing trend lines becomes an issue is because it's built upon subjectiveness. Drawing trend lines is drawing, right? What was the key word? What are these called? This whole section are drawing tools. Even TradingView calls them what they are, drawing tools. You go to Thinkorswim, they're drawing tools. I have a 7 and 8-year-old. They love to draw. Well, my daughter does. She's the 8-year-old. My daughter loves to draw. That's an art form. I love her art. I'm biased. You may not like it. You're not biased like I am. I'm their father. I love everything they do almost, right? That subjectiveness is where issues come up because I could draw a trend line. Pac-Man you may see it different. Jim, you're going to see it differently than me, right? That is subjectiveness. It's opinion-based. So rather than do that, let's do what the institutional traders do, and let's use shortcuts. So the shortcuts I like to use are mathematical generated trend lines. I've got 3 on there. I'm going to start with 1 to explain how they flow. This is not an exponential moving average. If you're familiar with those, you can use them. Okay, I just like to keep this simple. Moving average. It's just like this moving average down here. It's a measurement. We're able to now compare the current price versus an average price. Same thing we did down here, right, on the volume. So I use a 10, 20, and 40 or 50, just depends. But 10, 20, and then a 40 or a 50. I have 50 here, and I'll show you why later, but it's hidden right now. I don't have it on the charts yet. If you go Google 3 moving average trading strategies, you're going to see tons of articles about it, okay? Tons of research, tons of videos on it. What I'm here to do is show you how to stack them together, okay? I'm going to show you how to stack them. So when I see the close today at 358.79, and then I see the average 10-day price has been 360. You can see the data here, right? This data moves just like the volume does. Am I above or below that average? I'm below the average. That is bearish, okay? We are lower than our average over the last 10 days been. That makes it bearish, okay? If I come back to, let's say, July 8th, 355 was the average at that point. 355 was the average. Well, we closed that day at 358.77. So we were $3 over the average. That means that day was above the 10-day average. So this line you see now acts as our trend line. Now, if I start to apply manual drawn trend lines, you're going to see they line up very, very closely to this. So here's a downtrend line. I don't know what I'm adding on, but you get the gist. I'm connecting my lower highs together, and that's making my trend line, right? This trend line, you can see it's straight. The average, the green moving average here, has more undulations, right? It has more highs and swings. It's got more curve to it, but it's giving me the same information. Now, you will get more precise learning how to manually draw trend lines. If you have the time, if you have the money to sit down and study and invest in education, you can learn to do it yourself. Many of you probably already tried, and it still doesn't make sense, right? So rather than live in the subjective world of drawing art, we can now leverage the same type of data in a mathematically driven way. Now, it's not going to be as precise down to the tick as you'll find manually drawn it, but if we're swing trading for days in a few weeks, you can be quite successful getting close, okay? So we look the same and we act the same as when you see the candles break above or below this line. So you can see here starting on May 20th, we broke this downtrend line. So think below the line, think downtrend, think above the line, think uptrend. And you can clearly see how the bars and how the price reacts as we stay above this trend line. So that's what we consider the breakout point. The inflection point or breakout point for the NASDAQ here recently was on May 20th. And we stayed above. We had a little dip below. But other than that, you see how we bounce off this average. See how we're bouncing off the trend line. And then we break the trend line. So July 16th last week, we broke the trend line, right? You can see visually if I draw my cursor up and down here how that trend line was broken. Same data, same information, right? So now we are in a downtrend on a 10-day average. But that's just one level. That's one layer. I'm going to introduce the larger term average. In fact, I'm going to turn off the price up top. I want to remove the bars. Now we're just going to look at those two trend lines. I've got the 10 and I've got the 50. Okay, so this is now instead of a 10-day, it's 50 days. It's going to be it's going to be more smooth, less up and down erraticness because it's taking in larger amounts of data to get us the average. The average 10-day was 360.02. So the green line here, that's the average 10-day lag is 360. The 50 is at 342. So is the 10-day average price higher than the 50? Of course it is. You can see the line, right? The line's above. That means we are in a what? It's an uptrend. So the 10-day price is averaging higher than the 50, okay? If I tighten this up a little bit more, you can see how this reacts to each other. You don't get a lot of crossover, right? Comparing the 10 to the 50 gives us a high level, about a 10,000 foot view. 30,000 foot view is more of the classic moving average for investors, right? A 50, 100, 200. A lot of you have heard that, a 200 EMA, right? Those are an institutional investor type of indicators used, right? Those large picture looks. Being a little bit more active than a investor, we're being more of a trader here. So when we see the green line above the red line, we're now bullish. When we see the green go below the red, I want you to think bearish. Now, when's the best time to get into these positions? The best time to get into these positions is at the initial crosses. Okay, so if I drop these arrows in, you see how we cross from down to up? That is where we want to be. So if I go back historically, we're just looking at buys. So we're on the buy side. I'm not talking about shorting here. We're talking about buying. Where I have these arrows drawn, let me try to get this piece back here. Look at how long these last, all right? So this is going all the way back to April 20th, the initial recovery, post-COVID shutdowns. I say that with quotations because some places are still shut down to some degree. Look how long this run is. You're talking about a trend from April 20th all the way through September. So that's May, June, July, August, September. You're talking about 5 months of a trend. Okay, then we cross again, and now we're October 12th to October 29th. So that's about two and a half weeks. Then we have another break from November 10th, all the way till the 2nd, 3rd of March, right? So you're talking another 4 months. You get another move here, April 8th, all the way to May 13th, so a little over a month. And then here's our current run here that started on May 28th, June 1st timeframe, right? Reason I highlight this is because it's not only identifying when we uptrend or downtrend, but it's also when do we want to be in? Do we want to buy at the highs? Do we want to buy these high peaks, right? To me, the answer is no, because we don't know when that trend's going to end, okay? We want to be at that inflection point when we get that initial breakout. So when I remove the price, it makes it easier to see, doesn't it? Because once I then introduce the candles back, then you can start to get dizzy looking at all of the different angles here. So that's why I like to explain it with the bars off, and then we add the candles back in to try to see it with a clear lens, okay? Now the middle one here, this 20, that's as we get a little bit more advanced, okay? So just to keep things simple here, the 20 is just another subset between the 10 and the 50, okay? So it's a middle ground point. So if I want to get out early in a position, if I want to get a different entry, I can use the yellow line, but we'll teach that in class. But if I just look here, I can now get a sense for uptrends, downtrends. I hope you can, because it should start to see it. So what it allows us to do is to quickly flash. Now that I have this basis set here on the screen, now I can flash, right? Let's jump over to another market. Let's jump into, does anybody trade Forex here? Anybody trade the Forex market? So if I start switching over, now I'm looking at the Aussie dollar, US dollar currency pair, right? Are we in an uptrend or downtrend? All right, let's go to the euro. Downtrend. Okay, let's go to the pound. Downtrend. Dollar gaining strength against those, right? Look at the New Zealand dollar. Costing less dollars to get a New Zealand dollar, right? Dollar CAD. Okay, dollar strength. Dollar Swiss franc, bullish, right? Dollar yen, flat. Okay. I can switch to anything. I can go to cryptos if I wanted to and flip over. Let's go to crypto list. Much of this is going to be downtrend, right? But look, I can now flash through and visually see. I don't need to sit here and draw a trend line after trend line after trend line to understand what's happening. I can now flip through quickly and understand up and down, right? It's a mathematical function, nothing more, nothing less, but allows a consistent method to see uptrends, downtrends. Very simply, very clearly, up and down. So when we're out there searching for, remember what we're talking about. What is the entry, okay? So this is the point. So let's add this together, okay? Let me put this together for you. Now we're going to talk about incorporating the volume. So I'm going to go back in time. And we're going to come back in time here. And this is how we implement the strategy. Yeah, we'll have the webinar recording available. Yeah, no worries. You're having internet issues. Yeah, we have a summer storm here, which is normal in Florida. So I haven't had any issues here with the internet. Hopefully, knock on wood, it'll maintain itself. All right. But let's put it together quickly. We want to see confirmations, right? So as many confirmations as possible is the key to our victory here. So the levels of confirmation are going to be simple. We want to see this. And I'm going to show you where it's at first. And then we'll build the entry. Okay, so I'm just rolling here. I'm going to show you the best example of what we look for. So we want to find the point in the market where we get the confirmed activity in the direction we're trading. Pacman says, when would you use the 50 rather than the 40? I'm going to give you a screener. So down here, we've got to be able to search for stocks quickly, okay, positions quickly. So with TradingView, the reason I use 50 is because I don't have an option for the 40 in this filter set down here. I don't have the option to do it. So you could see one of my settings is searching, right? So remember the what conversation, what to trade? Okay, what I'm going to show you now is when to trade it. I'm showing you trend, and then when to trade it, and then I'm going to show you, reverse it, how do we find what to trade at the right time, okay? But that's why I'm going to use the 50 here today. If I'm just manually analyzing an individual symbol, then I'll tend to use a 10, 20, 40. But if I'm looking and searching for a new trade, I'm going to use a 50 just so it matches up with my filter criteria. All right, that's the simple explanation, and that is the explanation. So what we want to have happen is we want to see an uptrend. So I'm looking at buys on a sell or a short. It's the opposite. Okay, so let's just keep it to the buy side to keep things simple. Most people understand and relate to going up, price moving up, not going down. We're looking for price to be in an uptrend. Okay, so if I come here, and I come to this day, let's just see, what day is it? Okay, it's June 16th. You see, we're in an uptrend, right? We're closing above these two trend lines. We cross back here, but this cross was not driven by volume, okay? So the confirmation is, it's going to be threefold as we get more advanced, but I'm just going to show you the two-sided indicator, okay? So the 10 and 50, where is the close, right? Where is that market compared to the 10, which is the green, and the red? Well, I've got the green trending above the red, confirmation number one. Number two is I've got the close also above both those trend lines. The third confirmation here is we've got a volume surge. So you can see 55 million shares versus an average of 34. Look at the column above the average. That's the surge we want. Once we identify that surge, I'm going to put the line here so you can see it. That becomes our potential entry. I say potential because we're not in it yet, and I'll explain in a moment. So at that point, we've got a visual confirmation that it is a volume move. There's activity around that symbol. It's in an uptrend. That is our entry. So just following that simple strategy of timing the entry, you're sitting here, and if you took that back then, it's 3.89%. On this ETF, that's a lot because most people trade the option here. So 3.89% on the Qs on an option, that's going to be a sizable profit on an option trade, okay? But that same inflection point, and I'll just go to some random stocks. Let's see what we got here. And we can just go flash through them. And I'm going to show you over time these breakouts followed by, it is bullish or bearish, right? So take a look at this move. This is Ashford Hospitality. You see how we're below? You get the cross right here. It's a volume move, right at volume, and look at that price drop, right? That's that momentum. Let's go to space. It's amazing. I just don't get it. With space, put a man on the moon, and, or not in the moon, but put a man in outer space, private company, and next thing you know, it's a sell-off, right? But that's what happens when people buy the news when you should be selling news and buy the rumors, okay? So price drop, right? You see this, we're not above the cross, but come back here on the initial crossover, right? See the volume play? Here's the cross. See that volume play here? Above volume, look at that momentum carry, right? Let's go to Genie. I'm just looking at the most recent cross, right? Here's the most recent cross down, so it's a down move. You see the volume move, see the volume below, and look at that price drop. Okay, so it works both sides, up and down. Here's the recent GameStop meme stock, right? But you see the volume push above, the cross, bang, stock price jumps. Stock price falls, there's our entry. This is a meme stock, so it's very artificially inseminated with the volume and activity, but it still follows the same philosophy, right? Come into new residential investment, NRZ, go to the most recent cross, and I want you all to do this to yourselves. I'm giving this to you. Go run this on your own trades. Yeah, I love it. Yeah, Spice diluted shares. Yep, sure did. All right. There's the cross, volume cross, bearish. Look at the price fall. Okay, let's go to some uptrends, if there are any. American Airlines, look at the cross paired with volume. Look at the stock price go. I mean, it's just how the probabilities roll. Look at this cross and bounce, volume move, price drop. A lot of this stuff is going to be priced below the 50 because we've been in a downtrend, right? We've been in a recent downtrend. Look at these moves down, right? And just start to visually see where that volume first hits after the crossover and watch what happens after the fact. Okay, that's what trading is about, is how do we get probabilities? Let's go to gap. Go to the initial cross and see the volume kick in. And if we're below it, look at the sell-off. It's not magic, it's math. Okay, it's just how the markets react. Come to the bigger index of the SPY. Cross way back here. Okay, we're still in an uptrend on the SPY, even though we had a downtrend. All right, where's the initial cross? Holy cow, we got to go way back in time here. Look at this crossover. Okay, here's the cross. The green turned over the red here. Volume move, and look at this rocket ship. And look how it's holding all the way up here. Okay, so the magic question now is, how do we get in front of these trades? I got a question coming, but a red candle with high volume would spook me. Yeah, it may, right? And I guess it does for you. What you got to understand, and try to understand at least, and it's hard, I get it, is a trend is not made in a day. A trend is a collection of previous price levels combined together to give us a trend. All right, if we just looked at one day, we can't really get a sense for it. Is it going up or down? Is the trend going up or down? If we looked at one bar, how would we know one bar? If I could, I don't think I can do it. I should try to do that in a class, is get one bar on the chart and say, where's it going to go? Is it going to go up or down? Right? We need to have data to forecast the future. The more data we have, the better off. So if you think about that in the terms of looking at one candle at a time, imagine being able to only see what happened today, not knowing what happened the day before or the previous weeks. How would you know what to expect next? So entries. We've got to, how do we get into this position? How do we get in here at that initial cross? Yeah, got another question. Let's look at Forex. Okay, let's go to Forex again, and then we'll answer the same question there. Okay, so I only really mess with the majors. I don't mess with any of the exotic stuff. You could add in a couple more. Let's go to my, so this is what I typically review. I don't get anything outside of these. Some yen crosses, Aussie yen, Canadian yen, pound yen, New Zealand yen, dollar yen. You could do euro yen too. But other than that, I use the dollar basis. Same premise. See the cross? Look below. See the volume? This is the Aussie dollar. The Aussie yen, excuse me. See how these crosses line up? Volume move down, cross here, right? Look at the volume column. Look how long these runs last. Here's the initial cross way back here. November 9th, November 18th. Look at this run, and it finally broke here. So how do we find these, right? We've got to be at that point of the cross. We want to be at the crossover. So the beautiful thing about TradingView is that we're able to do it. Okay, so I'm going to give you all these settings. So this is the equity side. You can do the same thing on the Forex side. So take a screenshot of this. You can take a screenshot with GoToWebinar. There's a little camera button in the top half of the viewing window. You should see a little camera. Click it. It'll save a picture to your desktop. I should have said that earlier today. I do apologize if you didn't know that. So you don't have to take copious notes. Okay, but this is how we can find stocks. You can do the same thing for Forex. So what this is doing is giving me a couple dimensions here. So this is looking for buys. This is a buy setup. These are pretty static, symbol type exchanges here. And then I got volume. Okay, so volume is going to give me a minimum. I want a minimum volume on a day. So I like to look at 1 million shares a day as a basis. Okay, 1 million shares today. It's 5 o'clock, right? So this is today. I only want to see stocks show up in my list that traded at least 1 million shares today. Now this next setting here, this next filter is average volume 60 day. Okay, so now I'm looking at a minimum of 1 million shares on average per day over the last 60 days. Okay, what this does is it sets liquidity up. I'm only going to look at liquid stocks. 1 million shares may sound like a lot. It's really not. But what it does, it removes all the small stuff, 10,000 shares a day, 15,000 shares, 100,000 shares a day. Those aren't as rambunctious as 1 million plus. Any of the stocks you've ever heard of, all the major stocks you've ever heard talked about on Talking Heads, through all the various financial sites, they're talking about stocks that will show up in this list. All right. Now down here, it's simple. If I'm looking for a buy, I want to see the price move up today. Okay, so I'm going to look for stocks that went up today. So any change percentage above 0. So these are positive moves on the day. And then here I've got, this is where it becomes important, right? So this is an aggressive entry. So this is a last price crosses up above the simple moving average 50. So what this is saying is it's only going to give me stocks where the price crossed the 50-day moving average. Okay, so this moving average I have on the charts, the indicator, is going to match up with this simple moving average 50. So now I've got a mechanism. Now let me explain this. It says 90 matches. So that means there's 90 stocks today that match this filter criteria. Now there's technology out there that you can pay for that can do this for you. This is all free. I don't have a paid account here. It'll tell me to upgrade. All right, so if I go to my profile, I'll show you. I don't want to leave the page, but it literally says upgrade. This is free. Okay, so you can actually search for stocks for free with these criteria. So I'm going to pull this down so you can see the charts that pop up. So let's go to the current price here, and you'll see exactly what I asked for, right? So look at this. The price just closed and went up above that 50. The 50 is the red one. So I got it red, green, and yellow, like a stoplight, okay? So when that green, when it goes from red to green, that's like go in your car, right? That's like green light, go, okay? That's why I have it set that way. Yellow is like, oh, okay, let's wait and see what happens. But I can now go up and down this list of stocks in this list just by highlighting them, and then I can hit the down key. And now I can pull up all of these various stocks, okay? And remember what we're looking for is that inflection point of that breakout. So now I don't have to sit there and go and just luckily stumble upon something. I can build a list to go evaluate. You see that? All of these stocks. Now, what we're going to do here is we're going to change this a little bit. So I want you to write down next to this strategy, this is aggressive, okay? So this is an aggressive strategy. Remember what I said about the price of the bars will give us the first indication, okay? If we want to add confirmations, we've got to change this up a little bit, okay? So this is aggressive. I'm going to show you conservative entries. So what we're going to do now is we're going to use this simple moving average, and we're going to build this to cross up the 50. So where we had 90, you see how this says no matches? What that means is that conservatively, this is TradingView. So we're still on TradingView. Yep. Got a question, are we on TradingView, Yahoo Finance? This is TradingView. This is a free account at TradingView. On the bottom, so when you first log in, it looks like this. That's what it looks like. And then when I come down here and click on Stock Screener, I can then pull up this screener that I had. Now, what does this mean that there's no matches? Well, it means exactly what it means. There's no matches. Okay, that means nothing matches up with that criteria. So what I'm going to do is I'm going to remove this last price above. Okay, so that was asking for like 5 confirmations. So I'm going to get rid of this last price above, and now we're going to get 3 symbols. All right, isn't that interesting? So now we're going to see only 3 stocks. Now, how many stocks are there, right? Watch this. There are, I'm going to get rid of all these settings, okay? 11,688. If you've ever wondered how in the world people hit home runs all the time, right? You think, you've heard about them, maybe you've been in events like this and people start showing all the results, and then you buy their program and you can't get anywhere close to their results, right? Well, what they found the breakout. Okay, some of you have home runs yourselves, right? I have home runs, 400% on an option trade in a few days. That's a home run. I mean, it's only happened a couple times in my entire career. That's a home run, right? I mean, that's like a grand slam, bottom of the 9th in the World Series level, like home run, right? So how do we get down to the ones that are ready to buy now? There's 11,000. If you trade options, there's dozens of ways to trade options. How on earth do you know which one to trade? If you're like most traders, you only trade a handful of stocks. No wonder you can't get the consistency you're after, because you're only looking at a couple stocks. And I already showed you how long these trends can last. These trends on a breakout can last for weeks. And if you constantly are getting in and out of the same position, it's difficult to be consistently making money. What you have to do is expand your search criteria. You've got to expand your horizons out to open the door to capture the next breakout, because breakouts happen every day. Some days there's more than others. So how do you do it? You've got to be able to filter down and search through the market. So when I come back in here, that's how we begin. Okay, so exchange. We're going to stick to the big ones. So NASDAQ, New York Stock Exchange. There's one level filter. So what do? We're now down to, we had 11,000. Now we're down to 7,600. Okay, let's go to the next one. We're going to do our volume. So we're going to do average volume or volume. We want to get liquid stocks. Okay, so stocks today that traded over at least 1 million shares today. Okay, there's our next level. All right, what are we down to now? Okay, we're down to 1,968 stocks. Okay, let's get the average volume. Let's make sure that these are traded average over 1 million shares. Okay, let's add another dimension. Okay, now we're down to 1,243. We see we're chipping away. Now let's get down to the ones that broke above that average move. So now we're going to get into the simple moving average. Let's get the 10-day. We want that to cross above. So now we're getting technical. Crosses up over the 50. And now we have 1, 2, 3, 4. The one thing we need to add is I want a positive gain. So we're going to go change today above 0. So just like that, that needs to be above 0. Add below. There you go. So there is our 4 of our price. Okay, so we went literally from 11,000 down to 4. What do they look like on the charts? Well, look at them. Is that a cross above? Do we have volume? Oh, we have volume. 2.17 today. The average is 1.7. That's a trade for today. WEC. See, we're above that cross. Just crossed. Oh, yeah. right at volume. That's an entry above volume. There's a trade for WEC. Alliant Energy Corp. All I'm doing is matching up the volume. 1.16 today, average is 1.089. We're above, everything's crossed. Boom, there's an entry. There's a trade. Then we have EXC, Exelon Corp, same look and feel. So we literally, in seconds, cut the market down from 11,000 down to 4. Down to 4. That's how we get in and identify what to trade, when to trade it, how to trade it. Okay, so in classes, we'll teach you all of the entries and exit strategies. If you want the checklist, okay, so I've got a checklist. It's a beautiful checklist. It's PDF. If you want the checklist to go along with what we just went over today, type in checklist in that question section, and we'll email you out the checklist so you have it. Okay, so that way you don't have to, keep your notes. We'll send you out the checklist so you can go live your life following this strategy. Okay, I know many of you may be thinking, is it really that simple? What if it is? What if it is that simple? What you're going to find in that checklist is you're going to find the entry. You'll also find, and in fact, I can do it now. Let's not wait for an email. I'll send it to you right now. Let me just post you this link. I'm going to give it to you all now. I'm going to get my link off my site here, and I'm going to give it to everybody so you have it. Let's not wait for the link. Let's get it to you. Now, in that also, we'll call this an amazing bonus for the day. It's my birthday. I'm going to give you a gift on my birthday. You're also going to see a checklist how to pick the right option. So if you like trading options, then you can take this and actually trade the option that goes along with it. Okay. So we're going to hook it up all the way down to the checklist. Let me just find it for us. I think it's worth the few minutes here while I pull it up for you. And that way we can bang it out. If you like this level of trading, I already told you, we have a service that we actually send you out. Yeah, I've got you, Pete. I'm going to send it to you right now. So everyone's going to get it right now. We actually have a service called the EverSignal Pro Live, where we send you signals for stocks, options, and Forex. So our Forex has been on pause. We used the technology in the past, but it did not perform well. So we're going to apply these strategies to our Forex. So you'll see those coming out. So I just posted it. Okay, so there's a link now in your chat box. If you go to your chat box, you'll see a link. It's tinyurl.com/52xk7 blah, blah, blah. You have the link. Click the link. This is what happens. It takes you to this PDF right here. So this is what pulls up, is you'll pull up this sheet. Okay, this gives you everything I just walked you through. So this is 4D trading. Okay, so you've got how to set your stuff up, what to look for, how to actually set up the trade. So here's our crosses. Here's our entry, profit target, stop losses. And then down here is our option chain. Does everybody see that link? Something should be clicking green on your control panel. That's a chat. Everybody should have it. Type in a yes when you have the link. Make sure everybody, okay, good. So you got it in announcements. Yep. All right, phenomenal. Okay, good. So this is really everything I walked you today. It's right here for you. Okay, so it's all right here in class. So if you subscribe to the EverSignal Pro, you'll be able to join me every Monday, every Thursday. I was off a couple weeks for vacation in July, so good news is I have nothing else planned, so you're good. But other than that, we're live every Monday and Thursday, and then we archive them as well. But I wanted to get this to you so you had it. I don't know why it didn't dawn on me. So yeah, it works on shorter time frames as well. So great question there. And let me do this. So for those that are interested, I'll send you the link. So if you want to sign up, it's only $4.99 for the year. And when you sign up, you'll get access to our day. It's a daily. So we send out daily signals at about 7 o'clock. Between 7 and 8 o'clock at night, we send out all of the trades to you if there are trade setups. Now, we don't send out anything for the sake of sending them out. What we do is we only send out signals that check the boxes. Okay, so they've got to check all of the boxes to get them out. So basically, the program is simple. I'll just go through this real quick, go through additional questions. The EverSignal Pro has been going on since October of last year. We send you emails, SMS, once a day schedule, and what you receive is also access to our membership site. Membership site has all of the trade alerts all in one spot. You got your stocks, option trades, as well as Forex trades. Remember, we're only monitoring about 9 currency pairs. So it's not an everyday Forex signal because we're only looking at 9. There's nothing to download. There's no software to learn. There's no strategies to learn unless you want to learn what we did today, because that's what we use in class over and over and over again. You'll get options, stocks, Forex, and then the way we give you these trades are as follows. So this is the type of option trades we send out. These are low-priced options. If you're in Options Profit Generator, then you already have these, okay? This is a package that gets you all 3. So it gets you all of the option signals in that criteria, these stock signals in these price ranges, and Forex signals in a breakout. All 3 of those market classes you get for only $4.99. Okay, so you're talking anywhere from 400 trades to 600 trades a year or more for only $4.99. And the reason we're able to do that is because we have so many clients and we're able to offer low pricing because we have a large subscription base, right? So that's how we're able to keep that price low. So if you like it, you want us to deliver signals to you while we teach you this, if you want to earn while you learn. If you just want to earn and not learn, then you can just take our signals, okay? So simply put, 12 months. So starting today, for the next 12 months, you'll receive those stock trades, those types of, it's not any stock trade. These are low price stock trades. They're low priced options. Average share price of the option is less than $5. In fact, it's about $3. So if you have only able to invest $500 or less per trade, these trades fit your portfolio size. So if you sum up all these together, all 3, you're talking over $1,900 worth of value. But we also layer in more bonuses to help you get this concept. So twice a week, we're live with you. You also get access to our tracking site, our training programs that we roll out with you in class. So everything's valued, if you add them all up, to over $3,000. But because we have such a large base, we're able to offer this at a low price of only $499. So to sign up, all you have to do is go to this website, eversignalprolive.com. It'll redirect you over to our checkout page. It's just a long URL. I don't want to type that in. So we have a short link, eversignalprolive.com. It's also in your announcements if you want to sign up. You also get a 60-day money back guarantee. 60 days. If you figure a trade a day, there's 3 markets potentially to send out. That's 15 trades a week. 15 trades a week. Plus you have 3 hours with me every week. I mean, this is just an amazing price. We want to give back. We want to give you opportunity. So that's why you have this price. This price is not going to stay here that long. This price will be going up in the next several weeks. So make sure you lock this in. And by locking it in now, you lock in this low price for the future. Okay, so every year, if you want to keep it, you just pay $4.99 a year. You'll keep the trades coming to you. You'll keep access to the live sessions. You don't have to worry about anything like that. So I wanted to put that out to you. Okay, so Mondays at 7 o'clock at night, Thursdays at 10 a.m. in the morning, Eastern time. I'm in Florida, Eastern Seaboard side. That's going to be the classes. All right, so you'll be automatically signed up. You don't have to worry about signing up yourself. We handle everything for you. So I just wanted to put that for you. And if you have questions, you can stick around and ask them, and I'll be here for you. So I've got questions on what is the one tick for entering stop loss? Yeah, so you go one tick above. Okay, so we'll teach you this in class, but what you see in the signals will tell you the stock breakout price. Okay, so this is how we set them up. So we'll do a setup now. I'm gonna get one of these lower price ones. Let's go to WIT for a second. So I'll show you an entire trade setup. Okay, so follow the checklist. So you should have the checklist up, and I'm gonna walk you through it now. Let's get one that's a little bit more historical. Okay, here we go. So we're gonna look at this one because there's previous prices here that we're gonna use. So you take the high. So today's a high. Okay, here's our high price. This is the bar that broke above this trend. We had the volume, so this checks the box for what to trade. I'm gonna get rid of this bottom side. So this is how you'll set up your trades. What we want to see have happen is we want to see a surge of that price. Once we identify what to buy, we need to then confirm the breakout's happening. How do we know breakout's happening? Well, what's the essence of a breakout? The price is going to go higher than what it was, right? That's a breakout. So we use pending entries, pending buys. So we'll just take a look at this Exelon Corporation. So here's the high, 46.42. One tick above that bar is what we need to have happen tomorrow. So we set our entry one tick above that bar high. So that means we are at 46.43. See the number? 46.43 is the blue line. That's our pending entry. So if you're trading the stock, you're going to set a stop limit buy order. What that tells your broker is that you only want to buy EXC tomorrow. It's only good for the day. Tomorrow, if it marks at 46.43. If it doesn't, let's say it retraces tomorrow, doesn't come up and hit our blue line. That means we're not in the trade. We're not in a breakout. We don't want to be in the trade. So that's why we use daily signals, daily time frame, so we can get set up for tomorrow. If we're in the Forex market and we look at a 2-hour, we have 2-hour window to get into that trade. So same premise, regardless of stocks. And if I'm trading options, I'm still using the stock. We use the same entry point. So you'll see pending entries. To confirm the breakout, we need to have that price met, which is 46.43. So stop loss, we go to our previous level low, and we go one tick below the low on a stop loss. Okay, so here's our previous levels of lows here, right? So 44.62, so we go 44.61. Okay, so we're going to allow the market to breathe without breathing too much and losing too much. All right, so 44.61 is our stop loss. Now, when we send you signals, it's all in an email and text message, and it's on a tracking database, so you can go back and see trades. But this is what it looks like. That's a stop loss. Then we take our next previous level, our previous high, and we go one tick inside of that previous high. 47.36. So 47.35 is going to be our profit target. So like I said, to implement the strategy yourself, this is what it looks like. That's how we execute it. Now, we gave you additional profit target. We gave you 2 total, but this is just a simple example of how to set up your targets. But that's your entries, exits. Now, to me, this stop is greater than your profit. This one wouldn't check the box. Okay, we want a 1-to-1 ratio. But I want to show you what it looks like to implement the strategy. So a pending entry is where we set up. So for example, here's the signal we sent out yesterday. So this is a signal for EPD. We did this last night in the presentation. This is a put. Okay, so we were going to buy a put, an option, if EPD marked at or below 22.79, which it didn't do. Okay, so it canceled itself. This is what a pending option trade looks like. So not only will you learn how to set up pending stock buys on a breakout, we'll also show you how to set up pending option buys on this underlying stock itself. So it's a neat way to set up your trades. I hope that makes sense. But we'll walk you through that all. The signals are 100% transparent. We show you every piece of the puzzle, from what to trade, the symbol to trade, when is the entry trigger price, what's your stop loss, what's your profit target, across every one of the market classes. So I've never seen a program like it. You can be the judge of it. You've got 60 days to go through it. So once again, this is the opportunity for you. You get all of this support, all of these signals sent to you. You get the additional bonuses, and you're able to lock in this low price of only $4.99. If you don't want the program, that's fine too. I gave you the checklist, gave you the walkthrough. We'll get the recording out as soon as it's ready and rendered. So if you want to go about this and apply it yourself, then feel free to do it. If you want to earn while you learn the strategy over and over and over again, learn the advanced ways we use it, then subscribe for the EverSignal Pro. Get us delivering trades to you. At the same time, we'll teach you how to use them, and it becomes a ever-evolving program so you can get the most out of the market. You don't have to pay for any technology costs. Trading View is free. We also use bar charts, which is free as well as an additional tool. Trading options. The only thing you'll have to subscribe to if you want our services, you just sign up for our trade alerts. All right, and that unlocks all the classes and everything with it, right? So it's an awesome deal. The reason we're able to do it, like I said, is because we've got tons of loyals, hundreds of followers, and allows us to keep the price low. We don't have to have a high price to make this accessible. All of these trades are for the lower portfolio size. If you've got a larger portfolio size, then you're trading multiple contracts, larger share prices, number of shares per trade, right? But the volatility that we leverage allows us to get those big pops in profit for you, okay? So oh yeah, no, yeah, you're already signed up. Yes, if you're signed up, you've got access to everything in the Market Pro Live. That's exactly what this is, Market Pro Live. Address is all the same, so you're good to go there. Yeah, and your renewal is the same price, right? So as long as you lock it in, as long as you stay active, you'll be able to lock in that price, and everything is found in that membership site. So you're good to go there. Yep, you're good to go. So just to show you that you're in the right place, let me just show you what it looks like so you know you're on the right site. So it's going to redirect you. So if you just type in EverSignal Pro, EverSignalProLive.com, it's going to take you to our checkout page, just so you know where we're at. You've also got a pay in here, but you can see exactly what you're signing up for. Here's all the opportunities for you. You got PayPal. If you like PayPal, you can click that box. And then you've got your program. As soon as you sign up, you're going to have everything set up to you. Username, your password access, your membership site, and here in about an hour and a half, you'll get your first signals. So sign up for the SMS. I recommend you do that. To show you what the membership site looks like, you just go to Market Pro Live. So this is what the membership site is going to look like. So here's the membership site, marketpronow.com. You're just going to type in your email address. Once you sign in, it'll take you to the actual site, right? So you've got all the various trackers in one spot. You've got videos. You've got our sign up for our classes Mondays, Thursdays at 10. And schedule, we have videos of how to set up the Forex trades, how to trade the options, calls, and put strategies, OCO setups. This is your automatic entries to the option trades, how to set up your stock profit targets. Then you've got your trackers for Forex. You've got your trackers for option signals here. You have your tracker for the stock signals, right? So it's all in one spot. We also delivered to you via text message and email all of the information on the signal. Okay, so everything's there all in one spot. I don't know how else we can do it. No, we go over everything. So I got a question on Forex and stocks. It's all the same. Okay, so outside of the base currencies, the secondary currency pairs, the strategy deployed is the same, right? So yeah, we'll talk about Forex. because the chart's a chart. So we'll go into, and it's an open forum type of session. If you like today, if you remove the intro today or explain who I am, blah, 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 right? And took out this portion of the event, we're in the markets and we're going over trade opportunities, strategies, concepts of money management, psychological management. Sometimes we need some motivation. We go over that, right? So it's an open forum type of training session. So if you've got questions on Forex, then we'll talk about Forex. You got a question on how to set up option trades, we'll do option trading, right? So it's really built in a open forum event type. I'm obviously leading it, but the engagement's there for you to get all your questions answered. Yeah, great question. So let's just see what other questions we got coming up here. Let's see, I use Thinkorswim. The broker doesn't really matter. Okay, every broker that I've talked to with and used, and clients that I've had access to, use all sorts of brokers. On the Forex side, I use Oanda, but the entry types that we use is everywhere. There's nothing proprietary about how we teach you to set up the trades. No, so the option signals and stock signals are different. Most of the stock signals we put out there are in that $5 to, let's say, $20 range on the stock side. Those aren't all optionable, so we don't duplicate the trades. The option signals, you're getting really both. You're getting the stock setup plus the option setup. So we tell you the option precise trade. So we'll tell you what stock we're going to option, when to buy the option, the entry price, what expiration month, what strike price, what stop loss to use, and what profit target. So if you just trade stocks and you don't want to trade the option, then you can deploy the stock. So that's the only place you'll see really two trades in one. You get the underlying stocks set up plus the option trade. The stock signals are a different filter. We're looking for different stocks compared to the option search. Hope that makes sense. Charting software you can use if you want trade. Oh, it's TradingView, not TradeStation. TradingView. I just use the free account. Just go to tradingview.com, sign up for the free account. The advantage of the paid account is you get more watch lists, you get more indicators, but 4 is all I need. If you want 6 indicators, you're gonna have to pay an upgrade. So to me, 4 is enough. That's all I need. The signals are swing trades. The signals we send out are swing trades. So you're average a few days to a few weeks in a position. Forex is going to be days, right? So hours and days in a Forex trade. The day trading side is taught throughout the class. So like Thursdays at 10 a.m., I teach you how to deploy this in the live market. So Thursday's class at 10 a.m., the market's open. So we leverage a lot of the intraday early action to set up for our trade. So you'll see us use the intraday portion of this strategy in the class. The options are not exotic. These are straight calls, straight puts. We're not talking about multi-leg options. Buying calls, buying puts. I know how to trade all the other ones, but they're complex, right? I'm trying to keep things simple. So simple calls, simple puts. So you're buying a call or you're buying a put. I don't short stocks. In a bearish market, I buy puts. And we send out both sides. We'll send out calls, we send out puts, depending upon what's happening in the market. Depending upon what's in the marketplace, right? What are the conditions? What's the trends? And then based on those trends, we act, right? So we send out all sorts of stuff. So when you look at the tracker, for example, all right, you'll see puts and calls. So if I come here, this is the account we use to track it. So we've got, let's see, where's a put? Yeah, so this one was a put. So you see, this is the one that didn't fill, right? But you can see we were going to buy a put here if it broke out to the south. It didn't break out today, so it didn't enter, right? So we take it both sides. Tim, good question. It hasn't been covered yet. So the question is would the micro futures be a good instrument or the currency ETF? That's interesting. I mean, that's a personal preference. I think the pairs themselves with the leverage and the liquidity on the Forex side is advantageous, though currency, trading is also advantageous there as well for you. I think it's going to be a personal preference. You could use the data and go both ways with it, right? So I don't think there's going to be an issue. And at the worst case, just try it out. You have 60 days to go through it all. 60 full days to go through it. So if it doesn't make sense, if you don't like it, if you don't like the tempo of them, you can get your money back 100%. There's no qualifications. For someone that's been around so long, 13 years, worked with thousands, hundreds of thousands of people in webinars, $150 million in products sold. The last thing that I ever want to be involved with is limiting somebody who doesn't want to be here and being able to walk away free and clear with your money. Okay, so if you invest $4.99 and you find it's not for you, just let us know within the first 2 months. You have 60 days from today. You're talking over 30, 40 trades, 50, 60 trades potentially, if not more, in the next 2 months. If it's for you, it's for you. If it's not, it's not. Just tell us within the first 2 months. We'll give you 100% of your money back. 100% of it. No hoops to jump through, nothing of the sort. My name's on this. You know me by my name. The last thing I want to do is lose sleep at night. I've done that in my previous life. That's not by my choice, but that was the company rules. You had a checklist this long to qualify to get your money back, and all it ultimately did was make people that shouldn't have been very unhappy, and I don't want to be that way. So it's the most loosely provided guarantee. You tell us you want it back, we give it to you. I mean, there's no questions asked. We're not going to call you and badger you. It's just not our nature here, right? So great question. Another good one. Should one combine stock trading with option trading as a hedge? I believe that the more you get involved, the more you get engaged in classes and all that, you're going to learn all those techniques, especially if you can afford to buy the stock too. That's one of the advantages of buying the option is you don't have that big cost to make the gains, right? So, investing $1.50 a share on an option or $10 on a stock, how much can you buy? But if you have the account size to do it, then by all means, you're able to place both trades. The best thing about stock trading, in my opinion, compared to options, and I love trading options, is there's no expiration to a stock buy. I can hold the stock as long as that company exists, right? I can hold the stock for years if I want to. If it keeps paying me, if I keep making money, I don't have a worry about that trade expiring. So that's the benefit I feel in trading stocks. So my fib settings, I didn't go through my full fib settings. So I use a 30, 50, 70 Fibonacci setting, 30, 50, 70. You can Google it, but that's what I use. And the reason being is because it's more aligned with the mathematics of the market. If you've used Fibonacci, a lot of times the market doesn't get down to the 382. So what you start to do is you start to assume, oh, it's at 382. Well, really, it's a 30%. And then how many times have you seen the market dip below a 618 and then go back up? And you're like, well, is that a 618 or is that 786? Well, really, it's a 70%. So I promise you, if you try that and deploy that, you're going to see a lot more alignment with bounces and pivot points using that combination than you ever will a 382, than you ever will a 618, or even a 786. Okay, that's another hour plus conversation, and I'd love to sit here and do it with you, Pac-Man, but it is my birthday, and I've got some steaks to cook, all right? But 10 o'clock on Thursday, we're usually there for 90 minutes to 2 hours in class. We do that twice a week. You're talking 4 hours a week. 4 hours a week, 52 weeks, right? That's 2,000 hours for $4.99. That by itself is worth the weight in gold, right? Yeah, the 1, 5, and the 0. The 50% is the most often hit target. So as a baseline minimum, I want to see where the close is compared to that 50. If I see the market close below that 50, I'm going to start to anticipate sideways. It's going to move to the right. If I see it, let's go uptrend. If I see it bounce up above that 50, then I'm going to think, okay, the uptrend is going to continue. Okay, so like I said, even that simple 1 and 50 and 0 is still another hour plus conversation because I want to take you through the math of it. So I do appreciate that. Question, I just wish, we had another few hours. I've done it. I've done those long marathon presentations. Just today's not that day. So give it a shot. That's all. If it works, it works. If it doesn't, it doesn't. We've got hundreds and hundreds of clients that love this type of approach. And if it fits, it fits. If it doesn't, like I said, just let us know. Give us 60 days, and we'll do our best to earn your business. And if we don't, you get 100% of your money back. I mean, that's simple as that. Thank you, Pac-Man. Appreciate it. I've enjoyed working with you. Thank you, Tim. Mark, appreciate it as well. Got lots of traders. So I don't know your first names. I do apologize. Some presentations have first names, some don't. So unfortunately, I don't have it, or I'd love to give you a personal shout out. Appreciate it. Enjoy the checklist. We'll get the recording out here in the next few days. And for those that signed up, we'll see you Thursday at 10 a.m. But everybody that signed up, you're going to get your welcome email. You'll get your link to the user site, and we'll get these trades out to you. Okay, so look forward to working with you. Look forward to seeing you Thursday for those that signed up. And if you're not ready, that's fine too. Okay, when that time's right, we'll be ready for you. Can't guarantee the price will be at this price, but I'll guarantee we'll be here. Okay, so do appreciate your time. I will go barbecue now. Appreciate it. Cheers back at you. And from us at Concordia Financial Exchange, we appreciate you all. Happy trading, and I'll see you in our next live event. Thank you all.